The fact that we still see such high implied volatility for the yen, despite calm across the rest of the markets, the 75 basis points from the Fed, what does that tell us about how much future moves, potentially big moves, will hinge on what the BOJ does?
Yeah, normally the BOJ meetings are quite uneventful, and therefore implied volatility going into them is actually quite low. This is definitely not the case on this one. If you look at 1 week implied volatility, it's near about 17 vol, and to put that into layman's terms, what that means is over 1 week, they're predicting there's about a 75% chance that dollar yen will trade in about a 130.60 to 137.58 range. So basically a 7-point range. So from where spot's trading now, about 134.15-ish, basically about just over 3 points either side within a 1 point range. So a lot of tension going to this BOJ meeting, what it will do. So even though the Fed's out of the way, the markets are still on high alert for potential tweak to BOJ's policies, shall we say.
Yeah, especially given that JGB's slumped even with the BOJ coming to their defense. So what sort of tweaks could we expect if we see any at this meeting or the next one?
I think certainly if there was a tweak at this meeting, it would be a mild one. And in fact, what they may do is make a signal down the road for the July meeting. What in reality they may do is absolutely nothing. They're going to say, look, our policy's working. Certainly with the rebound in bond futures, say Japanese bond futures, it gives them a bit more leeway room. They purchased 2.2 trillion bonds earlier this week and about 1.27 yesterday. They can keep purchasing more bonds if they want to. So they have the leeway room to do it. And they're more than likely going to go, look, we don't want to just suddenly change course all of a sudden. So if anything, it will be an indication for July meeting. But at the moment, they may just say, look, we're standing pat, and that for the yen wouldn't be a positive.